Hello, Cleveland, and everyone from everywhere else. Welcome to your 10-minute TA for Monday, March 31st. The monthly candle closed at 8 o'clock. I'm a little late. That's okay. Here we are. Before we get into it, please give me a like, give me a subscribe or a follow or whatever. And as a thank you, as always, I'm going to give you this cute little animal sitting in a teacup. Ain't that cute? It is. I think so. Anyway, let's dive into the charts. All right. We're going to start here on the monthly because it closed. Let's take a look at the monthly candle that just closed. We'll look at these numbers up here. I don't know if you can see that cursor. You should probably see this one. These numbers here. I'll hold our thing here, and there we are. We opened the month of March at 84,385. We had a high of 95,150. We got a low of 76,702. And we closed out the month at 82,567, bringing it red and creating a spin top candle. What is a spin top candle? Well, it's usually a sign of a reversal, like here. Or, let's see. It's hard to find them on the monthly. There's one right there. Anyway, look at it on a daily or something. You'll see them. So yeah, what are we seeing on the monthly? Well, we could see that, like we saw, if you were here yesterday, well then you would have been privy to, we'll do the maximum length. Maximum length. We'll include the wicks, is what I mean by that. We were drawing the same bull flag. We could draw it here on the monthly as well. You know what this bull flag is. It's basically the one that's from the daily. And if it does hit, well, about 150. Well, 135. From here, 135 is the target. We got a Fib retracement that we can take. We do. We can go from doop up to here. There's our Fib retracement. I'm bringing it a little closer. 60,000. This is where this bull flag gets invalidated. It's very low. That would be a scary time. And I don't really know if we could recover from that. Why do I say that? Well, let's not include the wicks on the Fib retracement. There we go. We'll just do the candle bodies. 67.8. It's about right. We take the measure move. Let's bring that back over here too. Yeah, if we take the measure move from that 786 area or support level, Fibonacci retracement level, well then 124 would be where we're heading back up to, if we can make it up that high. But here's the one thing. While that's a bullish sign and we are still in a bull flag, as long as we're over that 786, we are in oversold territory here on the stochastics. Now, if we look at the stochastics, when they get into oversold territory, it's usually at the end of the bull runs. This would be the last bull run here in 2021. And at the end of 2021, stochastics got down into oversold territory, and they stayed there until the bottom, the very bottom. 15,000. Excuse me. Excuse me. 15,000 in December of 2022. So now we're there again. Are we going to see it come out? I don't know. Maybe. Kind of like this in 2019. I mean, we had like, a full bear market, and then came up into that, and then came back down, and then came back up into the bull of excuse me, the bull market of 2021. Maybe. I mean, anything can happen. Some people like to think that we're in a super cycle and say that we are. And hey, maybe we are. Maybe we'll come out of it. But RSI is higher than where it was then. It is under the signal line though. But anyway, if we get any lower here, which, one bearish signal, several bullish signals. So we're a little more bullish than bearish here on the monthly still. Pensively, as always. But we'll notice that into the bear market, it came down to this 100 moving average. There is no 200 on the monthly. There haven't been that many months. But the 100 here is where we saw bottom during the bear market. And it's where we saw close to it. We saw bottom the last bear market. It was actually the 50. What about in the one before that? The 50 as well. Alright. Well. Maybe we only come down to the 50 then. Where would that lead us? Well, the 50's down here in the 40s. And this one's down here in the 20s. But let's say it takes a year to get to the bottom. Well, let's count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. And we're here at March. We could say April. Where was this? You can see it right up here. It was at 18,720, and it's currently at 27,943. Let's just say it went up 10,000. So in a year, it might be at 38,000. So maybe that's where the bottom is for us in a year. Unless we have some more movement up, unless we can get a new higher high, and then we can redo all of these things. Maybe this is a super cycle. Who knows? Not me. We'll see. Still a little more bullish than bearish on the monthly. Let's take a look at the regular charts that we usually do, the 90-minute chart. So here on the 90, well, the double bottom played out, man. It got a little wonky there, came a little lower, but it did play out to basically where it started. I was looking at this point here a little higher, but it did got to where it did. Came to right to the retracement there. Invalidated what would have been a bear flag, but we turned it into a triangle, and we can get rid of that and this because it's invalidated now. What am I saying by this? The descending triangle there. Oh wait, I forgot there's that button. Haha. All right, so that's still there though. The what do you call it? Divergence, the bullish divergence there, still there. We saw a higher high as well. So perhaps, and a higher low. Looking like a higher low. And RSI is still over its signal line, finding support from it. Staying in the bullish territory, possibly. The Stokes are seeming to curl. Pushing the Stokes up here on the 6 hour. Let's see if it can push up, form another higher high. That's what we're looking for now. Oh, you know what? Back to the monthly. I forgot about the Bollinger Bands. We are high on the Bollinger Bands here. And when we get high on the Bollinger Bands, it's not unheard of to come back up to them, but we tend to move back down from them. Got high, came down, got high, came down. So yeah, watch out for those bull bands. That's another bearish sign on the monthly chart there. Oof. Hold on, I gotta add another song to this. We'll do this one. This one's going to end soon, and I am still going. All right, back to there. Let's see. Okay, so we're looking for this trend to reverse now, and it's looking like it may. We need to get over that 200, get back over the 85 resistance. If we can do that, then we're well on our way to invalidating this bear flag. But until this bear flag is gone, we're still pensively bearish. We'll watch for the Stokes here to get into overbought territory and start curling over. RSI is still rather low here, still in bearish territory, although it is over its signal line now. So we'll see. Volatility is getting low here. We're near the bottom of the bull bands, so perhaps we can still come up here to the top of the bull bands, but the top of the bull bands won't invalidate this bear flag. Validating it, we'll need to get over 90K, flipping it to support. On the daily, we're looking like the curling of the Stokes here starting, but hey, we can get stuck down here. If these Stokes here come up into overbought, start curling, and come back down without, price action doing anything. And by doing anything, I mean like invalidating this bear flag, or really coming up over 85 if you can't do that, or even that 618 at around 86.5. Can't put in a higher high even. That would reverse the trend, because right now we put in a lower low. Can't put in a higher high. If we come in with a lower high now, then our trend is reversing. Our uptrend here is reversing, and we're going to see a little bit more of a downtrend. Now, will it come down to 77? Maybe, because an upward trending wedge, which that is, usually tends to come down to where it was in a downward trending wedge. Now, if 77 can hold, we see a double bottom, that'd be great. Come back up to 92. Maybe. That's some hopium. That's some future shit. See if it comes back down there. For now, 82's holding. And if 82 holds, well, then technically we still got a higher high from here. We just have a lower, there. So this is why I'm saying if we don't get a higher high, then the trend's reversing. But if we do get a higher high, well, trend is secure, because higher lows still, higher highs still. And if we get that higher high, we'll also be over the 200 now here, which would be a bullish signal. Fingers crossed. Anyway, back to the daily real quick. RSI down in bearish territory still, under its signal line still. Really, it's just like waiting to take its cues from these lower time frames. But if it can break out of this downward wedge and form the upward wedge for it, which now kind of like this one but in reverse, now it's forming this higher low. Because before it was forming lower lows, now it's forming a higher low. Now we need a higher high to reverse the trend to the upside. And if it reverses to the upside, well, where is it going to take us? Well, back up to where the wedge started, which is up here at all-time highs. So we'll see if that happens. And as we know, we haven't invalidated this bull flag in white. Still have the ability to, come up from this move. What would it bring it up to? About 115. From down here at the 786 from our last bottom down there at around 77. So yeah, are we under the, we are under the 200 on all of these though. So keep that in mind. That's a bearish signal. That's some bearish shit. So we got a little bearishness there. One bearish signal under the 200. We got a bullish signal with the divergence. We got a bullish signal with the downward wedge. We got a bullish signal with that. So there are more bullish signals than bearish signals, but we're pensive because of this bear flag. And there you go. That's all I got. You know what else is going on there, because we all just went over it. All right, happy monthly close. Tomorrow's April Fool's Day. Don't be a fool. Don't be anybody's fool. Don't you be nobody's fool. All right. Thank you so much for watching. Much love. See you later.